What is going on, investors? Hopefully, guys are doing well out there. That is right. It is finally Friday. If I fall asleep on this desk, you can probably tell what type of a week it's been for me. I hope you guys had a wonderful week. It is time for the weekend, and it is time for the Faang Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major Faang stocks. This week, we've got, I wouldn't say we have the most news, but this might be the most interesting news week that I've seen from all of these companies. We also had earnings from Apple. We also will squeeze AMD earnings into this video as well. There is a ton of very interesting news to get to. Better not waste any more time and kick things off like we always do with Meta Platforms. Start of the week at 304.36, like pretty much all of these stocks. Rally mode up 3.37%. Finished the week at 314.60. The company is facing a ban on behavioral advertising in the EU, really across the board. And so the way Meta is responding is a very interesting way. Now, on its surface, an ad-free subscription, not necessarily the most new thing, but you're going to be able to pay $12.99 per month on an Apple iOS device or an Android device, because those companies are taking their fees. More about that here in a minute. Or you can go directly through the web, like a website, and you can pay €9.99 per month. So here's what Meta, this is really interesting. So Meta is going to turn this into kind of the software as service business model. Certainly what we've seen over at Netflix, right? There is an ad tier base plan over at Netflix. And then if you want to watch, I think like HD, maybe it's another price. If you want to watch 4K, it's a higher price. I think there's also different prices for maybe how many users can kind of connect to your Netflix account. Like Meta is going to be able to do the same thing. This is really just the beginning, right? So you're going to pay $9.99 if you sign up through the web. But in the future, with AI especially, when we'll see this with Microsoft here in a second, Facebook's going to be able to say, well, okay, for $9.99, you get this. And then if you want this new feature that we're going to roll out, well, you got to pay $12.99. And so it's going to be very interesting over the next couple of years to see how they stagger these pricing plans, because the best way to do these pricing plans is have a good, a better, and a best. And so you basically give consumers three choices. Typically, you're trying to land them in the middle, but then you're going to have a certain amount of consumers land on the highest price, some on the, kind of the lowest price, and you have a nice basket of price for people to choose from. I think this is great for social media in general from a revenue perspective. Now, moving on to Apple, start of the week at 170, and despite reporting disappointing earnings and the stock, going down a little bit after it reported earnings, you're still up 3.5% on Apple to finish the week at 176.65. Now, the guidance wasn't great. So with Apple, we talked, and I'm not going to go super in depth. I just did a 15-minute video on Apple yesterday. You're more than welcome to find that on the channel. But look, so there's certainly still a lot to like with Apple, with north of $100 billion worth of operating cash flow, the buybacks, all that. Everybody already knows that's what you're getting when you get Apple. You also obviously get very steady revenues as it relates to iPhone, and you should see some rebound when it comes to Mac and iPad probably heading into next year. But what's that? I think we're all just waiting. What's that next growth rate for Apple? And I guess there's also risk that those Apple App Store fees, which we'll have a story about here in a second, like, do those eventually come under pressure from companies giving you options to pay two different prices, or, as we'll see here, maybe from a legal perspective as well. Now, the company is seeing its highest ever phone shipments to the great country of India. It reported growth of 34% year-over-year growth of sales of the iPhone into India as it crossed 2.5 million units. That's as India's smartphone shipments, as just broadly, remained relatively flat in the third quarter. So Apple is absolutely gobbling up market share in one of the might even be the highest populated country in the world. That's probably one area where you might get some growth. Now, Apple App Store's fees, this is what we were talking about, on dating apps may violate EU law. So if you sign up through like if you're on like Tinder or Match or one of these dating apps and you pay for, like, I've been married for a long time, so it's not like I'm on these apps, but I'm assuming you can pay to upgrade somehow, and maybe you can send a message or whatever. I don't know what happens. But Apple's taking like 30% of that, and it's potentially actually against the rule. I think this is probably the greatest risk to Apple, because when they reported their earnings, they had like $21 billion worth of revenue, and this is mega high gross margins. Off of this $21 billion, they make like $15 billion in gross margin. So if that comes under pressure, then the shares of, I'm not saying I anticipate this happening, but if it does, shares of Apple are way, way, way overvalued. Now, Apple takes the wrap off its scary fast Macs with the M3 chips. Now, they did some very interesting things. They say their brand new 14-inch MacBook Pro with the M3 chip. Yeah, of course, it's 60% faster than the MacBook Pro with just the M1 chip. You're basically going back 2 generations. So sure, if you're stuck on an M1 and you want to get 60% faster, and it's probably only certain workloads, if you're only doing email typing and maybe the occasional, maybe a photo edit or something, like 60% faster is not going to do that much for you. And when you stretch out to the Max chip, so that's what I'm running here on this computer. I have a MacBook Pro with like an M1 Pro Max, I think it is. So this one looks like maybe it's 40% faster. I mean, yes, if I had the money right now and I wanted to upgrade, I certainly could. I could sell this Mac for maybe $1,000 or $2,000 and upgrade, but I don't know. These Macs just didn't give me any reason to, unless my Mac broke, knock on wood, it doesn't, but unless it breaks, I have no reason to upgrade. Moving on to Amazon, start of the week at 131. Strong. Amazon's got some momentum, up nearly 5.5%, finished the week at 138.60. I mean, look, the 52-week high on Amazon is 145. So this stock is starting to move. Now, Amazon to shut down apparel stores and focus on its grocery business. These are only 2 Amazon style stores, one in Glendale, California, the other one in Columbus, Ohio, and they're going to focus on their Amazon Fresh and Whole Foods markets. I mean, we did Amazon's earnings last week, I believe. I love what this company is doing from a financial perspective. I love that they're doubling down on their businesses that are working, and they're quickly closing and moving away from the ones that aren't. Now, Affirm stock. Affirm is a buy now, pay later company that was, I think, founded by Max Levchin, which was one of Elon Musk's partners in the original PayPal. So he started Affirm, which is basically buy now, pay later. And look, I like Affirm a lot. I actually use Affirm quite a bit because I have really good credit, and you can go on there and get no interest. Like so for example, I went to a football game last weekend, and the seats were really expensive. It was like $1,500. So it was put that on a credit card, which is fine. I could do that, or I could pay it no interest for 4 or 5 months. No problem. So that's what I do with Affirm every once in a while, not all the time, but certainly something I do. And it jumped over Amazon's alliance. This is with they already have an alliance with Amazon on Amazon.com, but this is Amazon's e-commerce platform that caters to companies and small businesses. Very small deal, but shows you that the partnership actually looks like it's working out. Now, very interesting news here as the company entered into a new credit agreement. I think I said edited. It's more entered into a new credit agreement, and they're borrowing now $20 billion. So they had a previous agreement that allowed them to kind of maybe like a revolving credit line of about $10 billion. Now you're up to 20. Sometimes when companies do this, they've got something coming, right? In this case with Amazon, like an acquisition or something like that. You know what I mean? Like they're kicking the tires around on something and they want to line up the financing now. Sometimes it's not. Sometimes it's just, the terms are good and they decide to line this up at this current time. But sometimes you see these things and it means a company has something cooking. Now, speaking of cooking, look at Netflix. Start of the week at 402.49. I'm really excited to look at this from a technical perspective. Up 7.5% to finish the week at 432. I mean, this is like a $185 billion company, and you know what? 7.5%. Now, Netflix is set to discuss live streaming boxing match. We talked about last week. They're going to bring this golf match where they're going to pair like F1 drivers with some golfers, and then they obviously have this full swing show as well. Looks like they might go into live boxing. I think this time next year, Netflix is going to be, I wouldn't say a major player, but they are going to be a player in the streaming sports business. And look, these kind of and boxing's not necessarily necessarily one-off event, but the golf match is something like that is very interesting, where if Netflix can create these live events that also are not necessarily competing with normal sport, like a tennis league or soccer or like the NFL, obviously. Well, if they can create these one events and then kind of cross-sell you into watching some of their other programs, I honestly think that's a winning combination for them. Now, the company is reporting that they have 15 million ad plan users after 1 year of launch. I would have, if you would have given me like an over and an under on how many people I would have thought, I would have probably thought more than that. But I think this is a company with, off the top of my head, 270 million subscribers or so. And so that's, seems reasonable. Now, moving on to NVIDIA. A lot of chip news this week. NVIDIA, though, start of the week at 413. Boom, up 9%. Finished the week at 450.05. Also very interesting from a technical perspective. Now, big news here. Alibaba unveils an open source RISC-V tech chip for use in AI, cloud, and data centers. Now, they've been working on this for a while. Alibaba's actually been working with RISC-V. Now, RISC-V is an open source instruction set. It was developed out here, I believe, maybe in the early 2000s, maybe even the 90s at Cal Berkeley. We're going off memory here, so I could have some of those facts wrong. But RISC-V, think of it as you have x86. This is if you have a Windows-based computer, you're going to be running on x86. It's either going to be an Intel processor or it's an AMD processor. Then what you also have is your ARM-based processors. Those are going to be in your phones, and those are going to be in all of your modern Apple laptops that don't contain Intel chips. And RISC-V is really an alternative in part to both of those, but particularly the ARM instruction set, where it's low power, but also if you look at like what Apple has done, you can put these in laptops and you can put them in servers. Because of the ban and the restrictions that the United States is putting on China, so we've talked about this, how NVIDIA's high-end chips are effectively banned now in the country of China. In fact, there were pre-orders by companies like ByteDance and I believe Alibaba even that had to be clawed back. So they had $4 or $5 billion in pre-orders, and those had to be clawed back. And so NVIDIA is not even allowed to sell those. So how is the country of China going to, they're going to sit around and just watch the United States take care of things? No, they're going to turn to an open source architecture and, very interesting. And so you're going to have, so because of those restrictions, China is going to adapt. They're going to create these RISC-V chips. And I think that's going to be probably not great news for ARM Holdings Company. Will see the impact on the x86 and certainly NVIDIA as well. Now, these are AMD earnings. We're not going to go through the whole thing, but I did want to point out a couple of very important things as it relates to AMD. We'll look primarily 3 months ended quarter over quarter. Those are these two left-hand columns. Look at your data center revenue ticking up from 1.3 back up to 1.6. Your operating income also doubled quarter over quarter. Now, year over year, you're still under pressure there, but we're looking actually pretty darn good. Also, your client business, your PC business, this has turned from negative operating profits back to positive and very strong growth there. Your gaming business, so the Xbox and the PS3, those are obviously a little bit softer sales, but you still got strong sales, relatively steady sales and steady profit. And then finally, your embedded. This is kind of embedded. This is like your custom business. This is the Xilinx acquisition. Also, very steady from a revenue perspective and an operating income. We would like to see that business continue to grow as there's a lot of custom business out there. Overall, solid net revenues, operating income. People want me to do a full video on AMD. I will just say this. I really like AMD. Really like AMD. Moving on to Google. Start of the week at 123.92, up 4%. I said 123. So yeah, we're up basically $6 to 129. Now, antitrust lawsuit is having Barclays get a little bit of a tummy ache, and so they're coming increasingly concerned that the DOJ might be able to lay the smackdown beatdown onto Google. I'm not convinced. I'm like, look, these kind of court cases, the way I would play them as an if I saw this and I had a tummy ache, Would I run out and sell Google shares? No. I would wait until, first of all, you get an announcement in a court, and then you have appeals, and these things stretch out for a really long period of time. And over time, Google is able to whittle either down a fine or whittle down the punishment to something that is likely not that tangible to the company. Obviously, there are circumstances where that is not the case, and it is very tangible to the company. But at the end of the day, people are going to use Google, and advertisers are going to advertise on it. Moving on to Microsoft. Start of the week at 335, up 5.3% to finish the week at 352. These stocks ripped this week. Now, here's what this relates to what we talked about with Meta. So Microsoft for a while has this premium LinkedIn version. Now, I'll have links down in the description below. Love for you to connect with me on LinkedIn, Twitter, all the places. Check those down below. I love when you guys interact with me and all that type of stuff on any of those sites. Now, the company has 1 billion members, and they announced new AI features for paying customers. And so this is what Meta's new business model is going to become, and really all social media, but Meta in particular. So they're going to start charging for stuff, and then when they roll out a new feature, they're only going to allow the premium members to have access to it. So I love that. I love what they're doing. Twitter's kind of doing that as well. Microsoft obviously taking from that lead as well. Now, Microsoft's iPhone moment is here. That's according to Piper Sandler. Is Microsoft coming out with an iPhone or a smartphone? No, absolutely not. They've already failed at that. But the M365 Copilot Assistant, that came live, I think, 2 days ago. Now, unfortunately, my enterprise that I work for has not upgraded to Copilot yet. Maybe they will. But this is going to allow your emails to be crafted for you. It's going to allow PowerPoint presentations in Teams. It summarizes videos for you. The estimates that I saw is that early adoption will push this to like maybe $10 to $15 billion of incremental revenue for Microsoft, which is obviously a lot of revenue. But again, this company is worth $2.6 trillion. So $10 billion is likely already priced into the stock. But you have upside here if you get mass adoption with Copilot into probably north of $100 billion in revenue. And that is not priced into Microsoft. Now, moving on to Tesla. Start of the week at 210. This one got charged up over 4.5% to finish the week, very close to $220 per share. Now, Elon Musk was making the rounds. He was on Joe Rogan. He was everywhere this week, and he warns that AI will make all jobs obsolete at some point. And look, that's a bold statement. But I think the people that have to be the most worried about AI is not the dude that's working at Walmart right now. It's not the dude working at Amazon. It's not the dude working some kind of job that he or she doesn't like. The person that should be most worried about AI right now is the person that went to college and spent a ton of time and probably money on developing an education. And now somebody with access to a computer system now has as much knowledge as they do. And so pair somebody that has a computer science degree versus a high school dropout with ChatGPT, and the high school dropout might actually code better than the computer scientist does. And so, and look, this is going to go to the legal profession. This is going to go to marketing. This clearly already is out there as it relates to coding. It is going to go to essay writing and copywriting. Like, the people that are most threatened by AI are the affluent and the educated, because next year, people that work at Walmart or Amazon are going to figure out that they have as much education as a Stanford grad at their fingertips, and they're going to quit. They're going to quit. And so that's why we talk so much about robotics and automation on this channel as well as it relates to Amazon, because when you don't have to work at Amazon, you don't. Now, Elon Musk says Starlink service, it's the internet service that he has launched with his basically his rocket ship company, it had cash flow break even. So that's very interesting. I've thought about getting Starlink. It's just negligibly cheaper, and so I haven't done it. But if I have any problems with AT&T or they raise my prices anymore, I will shift to that and maybe possibly an IPO. That would be very interesting from an IPO perspective. You'll have like every YouTuber in the world, probably myself included, will do videos about that and pumping it. Wait until you see the S1. Wait until you see the valuation it comes out at. and see who's the selling stakeholders are. Now, Subaru to use Tesla charging standard in North America. This follows Ford, Mercedes, GM. Everybody's going to be using the Tesla standard, and this is probably going to become one of the more profitable businesses over at Tesla. In fact, you could argue that Tesla one day might have, basically Ford like single-digit margins on the cars, but because of the software on the car, like full self-driving or something, and their charging business, might actually be worth it to sell the cars at essentially break even. Now, Ford to add 3,000 more Tesla superchargers to its EV charging network. I mean, if you own an EV and it's not a Tesla, like, have fun trying to charge it. And so it is good. It was actually nice of Tesla to do this. The superchargers was its greatest moat, because if you've been in a Mercedes EV or a Porsche EV or a Ford EV, they make great cars. Like, they really do. Okay. It's that supercharger network that makes Tesla more attractive. Now, the company is eyeing to produce 200,000 Cybertrucks annually. Apparently, I think they said that they have 1 million on pre-order. And so let's cut that number in half, because I honestly think a lot of those people aren't going to be able to afford the Cybertruck that bought it originally. So you're looking at probably a 2-year wait if you're on the wait list for things like this. And, for me, that the timing's probably good. But, Elon, I know you watch the show. If you can get me one of those early Cybertrucks, I would be thrilled to take one. Now, Tesla won a California autopilot crash. This was a tragic crash that unfortunately claimed the life of a driver out here in California. Apparently, he was driving Model 3, and it unfortunately went off the highway. And it was believed potentially maybe autopilot was involved, but there was no evidence that the Model 3 autopilot was engaged. And unfortunately, the driver was also under the influence of alcohol, which is obviously clearly a no-no if you're going to be driving. I will say I use the autopilot feature all the time in the Tesla in the middle lane. So if you have a Tesla or you want to test drive one or see how autopilot works, get yourself in the middle lane. The side lanes, some weird stuff happens, but in that middle lane, I've driven from here all the way down. I've driven for hours on autopilot and had it not kick off, particularly if you're in that middle lane. Now, moving over to the technical segment of the show, we are approaching decision time with the S&P 500. So you're creating this wedge. And so there's probably a proper technical term for this. I don't know it. If you do know it, leave it down in the comments below. This might be ascending wedge or something like that. But what I'm here to tell you is you're probably going to wiggle along with the S&P 500. In fact, it's through the end of the year. Wouldn't surprise me if you just wiggle along in this wedge. And then I'm going to give you just absolutely breakthrough. I'm going to give you a breakthrough analysis here on the Investor Channel. You are either going to break to the upside or you're going to break to the downside. So I know you all tuned in on your busy Friday to have me tell you the stock market's either going to go up or down. But look, since October of last year, and maybe not starting in October, it was really kind of in the beginning of the year. It was obvious we were starting to make higher lows, higher highs. I told you, stock market's going to go up, and you actually should be in accumulation mode on any type of pullback. Now I'm telling you, you're probably going to do a wiggle through this wedge. Eventually, you're going to break up or down. I would buy it probably immediately on the break up, because I think you blow past the highs. I think what ends up happening is this trend line ends up making a new high. So if you break some here at maybe 4,600, I think you've got a high probability maybe back to 5,000 at some point. You break to the downside, I would just wait. Okay. You could, if you're trying to if you're retired or you want to preserve the gains that maybe you have, I would have a stop loss somewhere here, 4,100 to 4,200. I would try to probably exit here, because that could mean we retest areas down here at maybe 38, 39. Those areas, anything south of 38, 39, you're buying probably really heavily, just whatever the news is, right? So moving on to Meta, we've talked about how breakneck trend. Now we've gone sideways. We've been sideways with Meta really since June till you get a break either above, which we're not far. Okay, you get a break above. I think you could potentially buy that breakout. It doesn't mean you would retest these highs, but there would be probability there, right? If you go, and that would be a move from 340 back to 380. A break lower, I wouldn't blame anyone for buying at the bottom of the consolidation. I wouldn't be overly excited about it, but that is possibly something you can do. Now, Apple is literally just sitting on the highs that it made back here in December. We've traded above them. We've traded below them. Those highs are just acting as a magnet until Apple really shows you trend one side or the other. It's probably going to start looking like Meta here very soon, where it's just kind of going sideways. Now, Amazon, a little bit different. Now, Amazon is trading sideways, absolutely. But it's a little closer to kind of like what I would call a decision day. You're here at 138. We've butt our heads multiple times on Amazon. We've butt our heads here at like 140. And every time, it's actually like 145. Every time we've gotten rejected. So with Amazon, you're looking for a break above 145. You get a break above 145. That can be bought. I would have a stop loss. And again, this is if you're trying this is like a short-term trade setup with Amazon. You break above, I would have a stop loss underneath, because you break above 145, all of a sudden resistance turns into support, and then you've got this cluster that you're going to chase up into, like in the 150s, 160s. That would be like a $20 move, and you would risk, I don't know, like $2 or $3. A rejection here again with Amazon is not overly alarming based on the fundamentals of this company. I actually think a rejection back down here to 120, 125 actually could probably be bought. Now, moving on to Netflix. So this is setting up perfectly technically. And we love to see this. We were on this beautiful channel for the longest time. I mean, it was like just, we had that, Tesla in autopilot, and we were just cruising down the highway. And then finally it kicked off. It was like, you weren't paying attention. You were doing text messages. So we're going to kick you off the autopilot. And we broke down. And then what did we say? We said, hey guys, don't worry. We're going to back test to the top of the line. That's basically what we've done. Now the probable move with Netflix, and there's still a little more to go. We haven't back tested fully, but the next move for me with Netflix is probably lower. Yes. Is it possible this was just a small deviation? We get back into trend. We make a new high. Absolutely. That's possible. You get back into this trend box. The probability, obviously, that goes much, much higher. But right now, if I was like, putting money and I don't like to compare like trading to like sports betting, but if I were to put my money on one side or the other, I would say we're going to do this with Netflix. And again, it's nothing against the company fundamentally. I'm just telling you, technically, that's what it looks like. Now, NVIDIA, you have clear support for this stock. I mean, the buyers come in like instantly at $400 per share and then move it higher. But with NVIDIA, you need to create a new higher high. You at least need to get above 472. It's about $20 higher. Ideally, you need to get above 498, which is another $50 higher. You had positive news from AMD. You're still like nearly 3 weeks away. November 21st, you will get earnings. Obviously, with NVIDIA, earnings have been very, very good, but a lot of that is priced in. Right now, also, I think, again, if I were to tell you one way or another, the higher probability too with NVIDIA is you just chop sideways between like 400 up to 450, and you just chop in that range. That honestly is great for accumulation if you're into it. Moving on to Google, looks similar to a Netflix where you were in this beautiful kind of upper channel. You had a big gap down, rebound. Now you're on support at 129. Wouldn't surprise me. You come up here and do a back test to like 135. Those of you that are in this for the shorter term, that's where I'd peel off some profits. You get a rejection this is what we're hoping for, honestly. So with Google, you're hoping for a rejection there and a new lower low. That's the move. I wouldn't do like let's say I wanted 10 shares of Google and it actually does this technical pattern. I would do like 3 shares here. The place where I'd be more excited about Google is down here at like 105, maybe 110, 105. That's where you do full allocation, in my opinion. Now, moving on to Microsoft. Wow, this looks so good. Wall Street is really buying into the Copilot story, and I actually think it's one that makes a lot of sense. This one to me looks like it wants to retest the highs that we made up here at like 370 and probably make a new high. That would be very, very bullish as it relates to Microsoft. I think dips in Microsoft are probably purchasable. Finally, Tesla, definitely from a technical perspective, is in the weirdest spot, and it certainly is the most it's the most different company out of all of these. This company actually manufactures stuff on their own. All these other companies are either software companies or contract manufacturers like NVIDIA and Apple. Amazon is also kind of in its own unique realm as well. And technically that stock also different. I mean, I don't have a big, honestly, I don't have a big read on Tesla right now. We found resistance, or excuse me, we found support in this range. We actually should probably have a box of support. There's a box of support down here at 185 up to like 210 on Tesla, where buyers have stepped in. They've done that a lot. For the past like 2 years, buyers have stepped in at this range. What they haven't been successful at is really pushing Tesla back to highs up here. I would say probably north of over $300 per share. What's it going to take for that? Cybertruck's going to ramp up relatively slowly, but potentially maybe some other product announcements coming from Tesla as it relates to that. Guys, hopefully you guys enjoyed today's video. Enjoy your weekend. Next Friday, I should be doing one of these videos. If I don't, I'll leave a post about it, but I should have a video for you guys next week. Not 100% sure on what time it will be posted, but just letting you know there might be some deviation in how these get posted next week, as I have some plans on Friday. Hopefully you guys enjoyed today's video. We'll be back again soon. Have a great weekend and a safe one. Good luck with your investments.